One may, it's easier to simply, since we don't have an Excel file anymore, select copy. Let's open a new Excel file. You can simply paste it. One issue with these filings, unfortunately, there is no standards to them. Even the naming is not standard. A lot of companies call it consolidated balance sheet. I'm going to tell you what consolidated means. Some people call it statement of firm's position, income statement. Some call it income statement. Some call it statement of operations. But from the structure, you pretty much understand. As you remember, or as you should remember from your accounting classes, balance sheet is the statement of what the company owns and what the company owes. The assets and liabilities and the difference between them, the so-called equity. Let's express these things in terms of total assets. As you remember from your accounting classes, we divide the assets into two major components. One are called current assets. These are assets that you could conceivably convert into cash within a year without losing much in value. I can convert anything to cash very quickly if I'm willing to take a big haircut or a big loss. You can also think of these as short-term assets versus long-term assets. So I'm going to take that, divide that by total assets. Since I'm going to copy, I'm going to make sure that row is fixed. I'll convert that into percent form. It's only 2 years, but at least as far as cash and cash equivalents are concerned, you immediately know that Walmart has a little bit less cash in 2025 compared to 2024. And I could do the same thing for others. Let's see. You know, inventories are pretty much stable. And I can do other stuff as well. I'm just going to do a few of them. On the liability side, we are interested in the current liabilities. Current liabilities are obligations of the firm that are due within a year. And anything above that, we call them long-term liabilities or non-current liabilities. So somewhat stable. So let's call this WMT. I'm going to add the income statement as well. Okay. Don't worry about that comprehensive income thing unless you're doing some advanced accounting and valuation. Where's the income? Oh, consolidated statement of income. Here they provide 3 years worth. So let's see. We're doing it as of percentage of net sales or total revenues. I'm sorry. Let's see. Cost of sales divided by total revenue. I'm gonna do that as a percent. It looks like it's pretty stable for Walmart. I mean, for every dollar of sales, they do about 75 cents to cost of goods sold. These are costs that before you worry about things like overhead, research, what have you. Oh, I need to make sure that this is fixed. I'm just gonna copy a few of them. I'm gonna also calculate the gross margin here. It's an important number we look at. One minus the cost of sale percentage. Okay. So it looks like before worrying about other costs, Walmart keeps about a quarter of every dollar of sales they make to you. Then I'm gonna do the same thing for operating income percentage. No, that's the operating income itself. I don't have to worry about that. It looks like after uh, operating expenses, which are marketing expenses, overhead, general administrative expenses. Walmart keeps about, eh, varies from year to year, about 4 cents or so. By the way, when you have numbers like these, and if you want to do it, I mean, for 3 years, it doesn't make too much sense. But if you had built this thing for 20 years, if you want to do a quick inline graph, just select the numbers under insert, hit line, spark line, and I want to put it right here. Of course, this is from nearest to the oldest. But nice thing about these graphs, they're like formulas. They can be copied and pasted. So if I simply drag it like that, if you don't want to do more detailed charts, you do the charts, and we're going to get to those. But now, I have some idea about the operating margin of Walmart. At least for the last 3 years, it's been going up. compared to 2023. For comparison, I'm gonna download the income statement of income statement only for Kroger. You can do the other stuff yourself. As you can see, Kroger has a pretty much similar. Oops, that's not what I wanted to do. See, Walmart, Kroger calls it consolidated statement of operations, and the items they have are not standardized either. So you kind of need to figure out from the context what they mean. This is Walmart. Okay, let's see. Come on, work with me. Walmart sells is cheaper, but not necessarily relative to the cost of obtaining them. I'm gonna do the same thing for operating profits.